Index trading is very difficult. Indices move fast, and a winning position can turn into a big losing one just an hour or two. Comment on that.
Yes, yeah, true. Indices are volatile. That's part of their attraction. Obviously, because it's an index, there are an awful lot of parts that go into it. I mean, if you're looking at the FTSE 100, then you've got 100 of the UK's biggest stocks in there. Very big multinational component to that, and you've got to look at the weighting of the index. Then you can see that the weightings towards the banks or oils or whatever. So yeah, it's a tricky one, an index. On the other hand, an index is a barometer. It's giving you a measure, isn't it? It's sort of, you're looking at it and it's gone up or down today, and that's telling you something about sentiment in the market for that particular day. And again, if you look at how an index has travelled over the past year or month or whatever, that again gives you a measure of sentiment and how that sentiment has been changing. If you are trading, going back to the volatility of an index, if you trade an individual stock, the chances are that if you're long of that stock and something comes out, that stock price can halve in no time at all. And we do see examples of that. The stock price can go to zero. A company can go bust. It can wipe out its equity holders. So that's not very likely to happen to an index, because at some stage, the idea of 100 stocks, the 100 biggest stocks in the UK, all going bust is unlikely. So I would say, yeah, you see big swings, but in fact, you are, to my mind, you are spreading risk. What you've got to consider really is, if you do what is the value of doing a £10 a point bet on an index which is at 6,000. That's £60,000 worth of stock, and that's your consideration.